Hi everyone, it's Saturday morning here. It's absolutely freezing in the UK, so I'm trying to do a video, another one about trade management, a way of dealing with the choppy days by only trading the high and low trades. Now obviously when we have choppy days, the problem is we get a lot of reversals and you know, 3 or 4 losses in quick concession is quite hard to take. So this kind of idea is basically going back to square one, if you like, and just trading breakouts that are the current high or low of the day. Now, to really make this work, you have to learn to hold hedges and let them expand, because this works by securing bigger wins. Now, you probably can use like a sort of stop and reverse exit technique with this, but those sort of market conditions don't last all the time, and you'll find that holding for the bigger wins with this approach does recoup those losses in particularly bad market conditions, and you know they do happen more often than we'd like. Okay, so the idea is that we completely disregard the high in the day in the Asian session. So from bar 1 of the day, that represents the current high of the day, and that represents the current low of the day. Okay, and we're always only trading from the current high and current low. Okay, so you can see your first trade is a breakout representing the high of the day. Okay, then you hold that until you get a low of the day and a breakout long. Okay, so your first one would have been here, and then you're in a hedge. Okay, this technique is all about the hedges and holding them until they expand. Okay, price breaks down, takes out your hedge, and then you get a new low of the day and you have a new hedge and you hold it again. Okay, then we go through onto the next day. Not getting, I think this is the first bar, so this would be your low representing your long, first long, sorry, and then your first short from the high of the day. Okay, and again you're going to hold it until a low of the day. Okay, so now you have the high of today and yesterday, and the previous day is stopped out. Okay, you hold your hedge again and price breaks out. Next day, this was your short from the high, long from the low, and this stops out. You hold in your hedges again, and this is your long from the low. Now the point of decision you need to make is, when do you close these down? Okay, you know, there's no right and wrong answer with that. I'm going to sort of try and scroll through and show that it doesn't really matter. Okay, but obviously here 3 short trades like that is a decent win. Okay, but you could argue too that at this point here, with these 2 trades, you could have closed those out and made a profit. If you did, then your long from here stopped out, and then we're back to this situation of having this hedge here, and we let it play out again. Let me just scroll along. Okay, so we were short here, this long stopped out. Might have actually got taken into this long, also stopped out, and then you would have secured your hedge here. You go through to the next day. Here's your long from the current low, then your short from the current high. You hold your hedge, you let it break out, price breaks down. Here's your next long from the low, and here's an opportunity to close out for profit. Okay, so you've got these 3, 4 losses and those 2 wins. Okay, if you close out, then you'd be holding this one until your next high. Here's your next high. Hedge, you let it play out. Here's the current low of the day with a breakout. It gets stopped out. Here's your next low of the breakout. Low with a breakout. This one's stopped out. So again, if you'd have decided with these two shorts not to take profit here, okay, now at this current point, oh no, this one is still active actually. At this current point, you're holding these two lows and you're holding these three shorts. So again, you have an opportunity to close these three out for profit. So you can see, you know, you missed a good TP here. You decided to hold a bit longer. You'll nearly always get another option. Okay. It's very unusual, you know, for there only to be one good exit when you're holding your trades like this. Let's imagine now that we closed out our three shorts here, okay, and that leaves us with, let me just, the long from this low and our current low of the day here. You see when this reversal trade sets up here, short, okay, it's not a current high of the day. Okay, this was the current high from our start of our trading session, so these trades you skip. Okay, now what this gives you is in days where it goes sideways a lot, you don't stack up a lot of losses. Okay, and also you reduce the amount of entries you have to take as well, which, you know, the losses are hard. Taking the entries after the losses is, you know, equally as hard. So if you remember, we're holding these two lows long. We go through to the next day, long here and a short here. Both of those stop out. We made a new high. We go short here and new current low of the day. We go long here. And again, you see these two lows we're holding here, opportunity to take profit here. Okay, if you didn't take profit there, let's scroll on and see what happens. So we've got those, we've got our two longs from back here. It's annoying that we can't see it, but I have to squeeze the chart in so much that it's going to be unclear about the entries. So we have our three longs, two from back there and this one, and this short from the high. Okay, we don't make a new high that day. We come through. Here's our first short from the high, then a long from the low, and price comes down to here. This one stopped out, this long has stopped out, so now we have these two highs and we have those two lows from back there. Come through to the next day, short stops out, long, and then a short sets up here. So now we've got these three shorts here, and remember our two longs from back there, I mean, they're still alive, and you know, the profit's been reduced on them, but you know, we've given it an opportunity to break out. We've had two opportunities to take profit on them. We didn't take them, and you know, it hasn't worked out this time. So you know, again, you have a decision. You can just hold all those open positions, or you can just say, well, you know, I've given them a chance, I'm going to close them out. What happens next is price drops dramatically. If you didn't close those two positions, yeah, obviously they're going to be losses, but you have these three shorts from the high that are a nice big win, hopefully covering all those losses and giving you some profit. Likewise, if you did close them out now, you didn't get those 2 losses and you got the drop. So you can see it's a case of holding those positions until you get a nice movement, and you're just kind of avoiding taking quick profits. I'll just scan on a little bit longer. So those 3 shorts, would have been a TP here with a low and a breakout. Then you go through to the next day. You went long, you went short, and what happened here? I don't know which one got taken out first. They obviously both got taken out. The long from yesterday didn't get taken out. So then, you know, this is obviously a big news candle. You know, make your mind up what you do, but let's just play it by the rules for a minute. So this is a short coming from this new high with a massive stop. Looks horrible, doesn't it? And this is a long from the low. So you finish the day with 2 longs and this one short, and you've taken these 2 losses here. You go through to the next day. Here's your first long, and here's your first short from the high. You have these 2 shorts, and you have this 1, 2, 3 longs. Now again, opportunity to close these 3 out, but you know, why would you? There's no profit in them, and you're holding 2 shorts here. You let the hedge play out, and I'm gonna have to zoom along to see what happens. Okay, so that was your long, that was your short. No more highs or lows that day, so you just let the hedge play out. We've got this long here, and there's a long from back there as well, and then we have this big short here. Go through to the next day. Price makes a new high and goes short. These 2 have been stopped out, and you've got those 3 longs, so there's an opportunity to close the 3 longs out and then start a new sequence. Scan along a little bit more. Okay, so you're short from here. You're looking for a long from the low. There's your long from the low, and you just hold it. No more highs or lows that day. Next morning, I think this one probably just gets stopped out there. Played devil's advocate, and there's your short, long, sorry, and there's your short from the current high of the day. This one stops out. Here's your long from the low. An opportunity to take profit here, but there's no big win there, so I'd much prefer to let the hedge play out. Price comes up, stops those 2 out. Next day, short from here, long from here, stops out, and then long from here. Price breaks up. Here's a high trade, so close out this 1, 2 longs. Probably barely covered your losses there. Go through to the next. I see your short there would have stopped out overnight, and long from here from the low, short from the high, and a long from the low. These 2 stopping out, and then a hedge at the end of the day. Next day, go long there, and then short from the high. So we're just holding this hedge now. Price comes down, and we take the long from the low, go through to the end of the day. I'm going to have to move it along again. It's long here. short here, and we were long here. Next day, long from the low, short from the high, stops out, and then another short from the new high. Price breaks down. We've taken these 3 losses here, and then a long sets up here. So you might decide here, alright, I've taken quite a lot of losses, I'm going to close out those 2 shorts to recover a bit. We're long from the low, short from the high. We'll let the hedge play out. This one stops out. Long from the low again, let it play out. This one stops out. Short from the high, and a long and a short. So now we have 2 longs and 1 short. This one stopped out as well. We've taken those 3 losses now, and then price breaks up to short from the high, and here you take profit on your 2 longs. So you can see just trading the high and lows of the day, and holding on until we get a movement. And you know, if we're taking if we're holding long trades, we wait for a short at a new high to set up for that day. Let's go on again. Hopefully you're noticing as well that, you know, there's periods where it chops around, and you know, you take a lot of losses and your wins probably barely cover your losses, or even you know, take some drawdown. But then you get these spells where, okay, we were short here, and then we go long from the current low, and then we go short from the current high. These 2 stop out. We don't get a long from a low at all there that day, and then we get a long here, and then it reverses and goes short here. So we take another loss here. Price comes down. Here's a long from the low. Chance to manage your positions, and you can see, so you know, these 3 losses were probably that much of your profit. So there's your big win, and a slightly smaller win there. So you get a lot of these scenarios as well, and that's what gives you the consistency over time. That is pretty much it, really. I mean, the only thing I do want to add is that if you get a day where, let's find a day. If you get a day like this, where you take your short from the high of the day, and then your first long sets up here, and boom, it goes 200 pips to your first hedge. There's no problem with closing that one out for profit then, because you know, the whole point of this is that you secure big wins. So if you've already got a big win on the table, there's no issue with starting your sequence again. Okay, so you start again from here, and then you go long in the morning, and then short and long, and that one stops out, and then long here, and then, you know, this time you end up with a stack of 2 highs. So there's nothing wrong with just taking a single high or low, as long as you remember that, you know, what makes this tick is that you secure decent size wins as well. Something to look at, you know, again, it might suit people. It's kind of how I started, you know, using the whole idea of the high and low to trade. You know, I was using the same concept of flow and just taking breakouts with no analysis before, but the the high and low was something I added to it because of observing the fact that GU and EU have these consistently low volume volatility periods in the Asian session, and that's kind of what made the addition of the actual high and low of the day. So just putting something out there, something you can perhaps play with, look at the weekend, add to how you're trading. Again, I don't want people to think that you have to have big wins, because as we know, a few people are using more of a sort of scalpy approach to their exit and doing really well and consistent as well. It's more a case of playing with ideas that might suit you better. So enjoy your weekend, everyone. I will see you all on Monday.